As I told you last class, we are going to start today to study industry analysis. We have covered economic analysis, and after that, let us try to understand what is industry analysis. Introduction to industry analysis. Now, after conducting analysis of the economy, as I told in the last time, when you come to know, as of now, Indian economy, GDP is good, inflation is low, interest rate is falling down. Since GDP is growing, so that means the production plants are operating at a good capacity, etc., etc. So this gives an idea to understand which are the industries which are benefiting more by this economic upswing. So similarly, if there is an economic downswing, what are the industries which are not doing well? Another thing. So these should be studied. So let me read it out. After conducting analysis of the economy and identifying the direction it is likely to take in the short, medium, and long term, because economy keeps swinging. Today something is government policy comes in, as I told in the last class, the government policy changes, or there is some policy in the international market. So it can be short term, it can be medium term, it can be long term. The analyst must look into various sectors of the economy in terms of various industries. Now, generally, what happens is that traditionally, by industry, we understand steel industry, textile industry, retail industry, cotton, or you can say textile is one part of the cotton is one part of the textile, pharmaceutical, cement. These are different types of industries. This is one classifications, and based on that, there are some classification number of industries also, the data of which comes out, because there is a lot of subcategories into that. Like automobile industry, there will be automobile components, there will be tires, there will be seats, there will be anything. So these are the traditional classification. But when I am going to look for investment perspective based on the economy and industry analysis, I try to follow something called cyclical framework. Now, what is that? This is another way of classifying industries, which explains how an industry reacts to the upswings or downswings of the economy. As I told you just now, depending on the upswing or downswing of the economy, some industries, some group of industries will be doing well, and some group of industries may not do well. So this is what the cyclical framework helps us to understand. General classification in this framework are growth industry, cyclical industry, defensive industry, declining industry. Now let us know a little more about them. Now, cyclical framework explained. Growth industry is an industry which, when the economy grows, it also grows persistently, and maybe it will be growing faster than the economy, because the economy is in the full swing. So like the automobile industry, suppose the economy is doing well, there may be people who has a passion for automobiles, or who has so far not purchased automobile because interest rates were high or the inflation was high. Now they will go and buy automobiles more. So that industry is a growth industry in that phenomenon. I hope you understand. So this is an industry which is expected to grow persistently, and its growth is likely to exceed average growth of the economy. Now the second is cyclical industry or cyclical industry. In this category of industry, the firms included are those, so we are classifying the firms which move closely with the rate of industrial growth. If the economy is growing at the rate of 6%, this industry will also grow at 6%. Economy drops by 6%, they will also drop by 6%. So they are they have a correlation with the positive correlation with the economy. So in this category of this industry, the firms include are those which move closely with rate of industrial growth of the economy and fluctuates cyclically as the economy fluctuates. Now, you must be interested to know some examples, sir. So I can tell you something. If the economy is doing well, that means there is a lot of construction, there is a infrastructure boom. So there will be demand for cement, there will be demand for steel and allied items. Okay, if there is a demand for steel, there is cement, then there will be paint, etc., etc. So, but again, when the economy is going down, people will not put in money in infrastructure and other thing because it costs a lot of money. So then the steel demand or the cement demand falls down. I'll give you a small example. When the rainy season comes, generally in rainy season the agriculture part of the economy moves well, but the other economy because of the rainy season may not grow well. So that time you will find the construction sector is not doing well. So the demand for steel or demand for cement will come down. So this is what is cyclical industry. It moves along with the economy. If economy moves up, it will move up. If economy moves down, it will move down. Third, we come to defensive industry. Now this is a group that includes firms which move steadily with the economy and decline less than average decline of the economy in a cyclical downturn. So what is happening here is suppose you are buying some stocks or share companies in this industry, then when the market goes down, the company stock may not go down that much. That's what they want to say. It is a defensive type of thing. So it's a grouping that include firms which move steadily with the economy and decline less than the average decline of the economy in a cyclical downturn. A very simple thing is pharmaceutical. Now, even if economy going up or down, demand of pharmaceutical products will be there. And the economy is generally, pharma companies generally keep doing well and not that bad as the economy is. And also I can say when some of the economy is doing well, then the industry will do well. But when the economy is down, then the average decline of that industry may not be that much. So FMCG, our basic food, basic food, not luxury foods, basic foods, atta, and etc. Your food items. Now you will take the basic things, even if economy go down, you may cut down the expenses a little bit, but you will consume those things. So regular, fast-moving consumer goods items, your toothpaste, you will be using. Maybe you will be a bit economic in using it. That's what is defensive industry. So if I have some defensive industry, if the economy goes down, it will not go down that badly. Declining industry. This is the category of firms which either generally decline absolutely or grow less than the average growth of the economy. What is this? This is declining industry. Absolutely it will decline or grow less than the average growth of the economy. Now to some extent I can tell it has an example. I am giving example because it will be easier for you to understand. Music industry. If you now see the music industry, even if the average industries grow, the music, like I can record or tape recorder and other things, that doesn't grow because the whole industry has changed. Okay. Similarly, there can be another industries which are generally in decline, but when the economy grows, it will not grow that much because people are living beside those items. So they will buy a little bit, but not that much, which the growth in the economy insists. So I made these four clear. So you can pick up companies from these different type of industries and build a portfolio, so that if the economic growth, some stocks will be growing. Suppose you have purchased A, B, C, D, growth, cyclical, defensive declining at XYZ ratio. Then when the economy grows, A will grow very well, B will grow as per the economy, C will not grow but will not fall also, D will fall. So overall your return will not go down very much. But if you are too much on defensive industry or declining industry, then if the economy go down, your return from investment will come down. Cyclical industry is sometimes better. When you economy go down, it will go down up to that extent. But growth economy is generally, even if it goes down, it will not go down up to that much. Defense economy, I'm sorry. So you will try to switch to defense academy. So when economy is not doing well, you try to buy Hindustan Lever or FMCG companies, pharma companies, or even electricity companies. Like Tata Power, another thing, the power people will consume. Industrial demand will come down, but domestic demand will be there. So you will be getting some return. It may not be a very good return. That is why this cyclical framework helps you to take investment related decision if you analyze the industry in this framework. Now let me go to the next one. The concept of structural analysis. Now this is an interesting thing, and please, you will find structural analysis is the key component of security analysis. It involves examining the underlying financial and operational structure of a company or security to determine its investment potential. So I have jumped into the companies whose financial statement analysis, management analysis, in which you analyze income statement, balance sheet, cash flow, to determine the financial health and performance. Management, how good is the management, whether they can resilient to the downturn in the economy or not, or they can handle growth or not, etc. Industry analysis, what are the different type of competitive scenario, whether they can handle competition, like say Asian Paints. Now it is finding a lot of competition from Birla Plus, JSW Paints and others. Earlier, Asian Paints, British Berger Paints and Jensen Nerorak, and Baki small players, regional players. But suddenly you are getting JSW Paints, Birla, Opus Plus or something like that. So you have to understand the industry. And finally, company valuation, determining the value of the company is based on financial performance and growth prospects. So we are taking growth prospect, which is future of the company. This analysis can help investor determine whether a security is overvalued or undervalued. That means if I say overvalue means intrinsic value of a company is IV and market price is MP. So intrinsic value is less than market price. That means when people will discover, then market price will move up. But if intrinsic value is low, but market price is high, that means value utna nahi hai, lekin market price is high. So sooner or later market price will come down. So you have to understand that in the corporate valuation. Now, why I told about these things about companies when I am doing industry analysis. Now, companies as a whole, company A, company B, company C, from the same industry, make the industry. So if I look at the average of various industries' revenue, their profit, I get the industry average revenue, average growth rate, and etc. And that will help me to understand, along with the economy, overall how the industry is moving. I'll repeat it once. Why I have come to structural analysis? Because the companies are the pillars on which the industry is standing. Now, if the industry is standing, the question is, if I take the average of different companies and then I see what is the average growth rate of the industry or average profit of the industry and etc., whether it is economic growth ka saath parallel hai or nahi hai, I can make an opinion about that. That is why the first line is that structural analysis is a key component of security analysis. So the average is very important here. Now, how do I go about it? Process of structural analysis. You define the objective. I'll show you a figure also later on. Collect data, financial statement analysis, conduct management analysis, conduct industry analysis, company valuation. Now you synthesize all the analysis of yours. I repeat it once. Define the objective. Which company, define the objective of the analysis, why you are analyzing. Clearly define the investor's investment strategy. What I am going to invest. Do I want long-term growth, or I want short-term growth, or I want quick growth and coming out? So I have to collect data of the company and the industry in which it operates. So whether there is a cyclical industry, that means if there is rainy season, suppose it's a fertilizer company, the demand for fertilizer will go up, the company will make good profit in rainy quarter. But once the results are out, the price will be factored into the market price. Third is conduct financial statement analysis. I analyze the financial ratios and compare the profitability ratio, liquidity ratio, solvency ratio, and try to understand whether the overall the industry ka scenario kaisa hai, all the industry is overborrowed or not, industry is solvent or not. Some company may be not borrowed very much. Okay, if I look at the some of the companies, power companies, another thing, Tata Power is less borrowed, Adani Power is more borrowed, something like that. Birla Cement, Ultratech Cement is less borrowed. That now, that is Ambuja Cement and ACC Cement, they are quite borrowed because of Adani has taken over. He had to borrow money to take it over, etc. Then the industry analysis with the market share, competition, regulatory. I go back to the cement. Now you know Ultratech is cement industry will be growing if the economy grows. Now Ultratech has the majority share or a market leader, but just behind it is the combined strength of Ambuja Cement, ACC Cement, and Orient Cement. All the three companies are owned by Adani Group. So if Adani also expands capacity and Birla does not, then the market share will be changing. So competition is very tough now between Adani Group and Aditya. Company valuation. In this state, intrinsic value of the company, intrinsic means the core value, not the market price. You know, for you, the market price of Infosys at 800 may be overvalued. But somebody, he says the future that they are doing a lot in AI, the value will go up to 1800. For them, intrinsic value is high, but the market price is low. So this is how an analyst will try to understand the company and the industry. In this state, the intrinsic value of the company based on its financial performance and growth prospects analyze. Growth, I said, maybe they are going to put a lot of money, lot of investment, lot of R&D in AI sector, which is going to be growing like anything. In fact, in US, all this the boom of the US stock market is because driven by the AI sector. Finally, when you analyze all these things, you synthesize the analysis. Now you try to give it a shape. You try to understand company's strength, company's weakness, company's opportunities, company's threats. Find the word. Company's strength, weakness, opportunity, threats. We'll come to it later on. Determining whether the company's security is undervalued and overvalued related to intrinsic value. So these are the various things you are trying to understand from the structural analysis. So you are doing in the one hand industry analysis by clubbing all the things, and then you try to find within the industry how they are doing, how each company is doing, because ultimately you will be not investing in the industry, you will be choosing one or two companies from the industry. Now let's go for a industry analysis. Is the process of examining current and future trends. So current, you have to understand how the industry is doing. As I told you, you sum it up all the companies in the industry, if the growth is good and etc. What the future looks like. This analysis typically includes studying competitive landscape क्या है, as I discussed to you about cement or as usual paints, market trend कैसा है, customer preference is going in which direction, either paints may they are looking for luxury paints or low cost paints, etc. And what are the regulatory factors coming in? You know, now the aeroplane, it was more or less monopoly of Indigo and Air India, but now government is thinking of there should be more airlines so that that regulatory factor will change the competitive landscape. I hope I make it clear. If rather than two airlines fighting with each other, if there are five more airlines comes in, then seven airlines will compete with each other. So competitive landscape will change, market trend will change, customer can choose more. So the regulatory factor can bring in all these changes, and that will change the airlines industry growth and dynamics. So there are some industry analysis models which have been designed by some of the consultants. One is Porter's five force model, which is McKinsey, is one of the leading strategy firm. Then SWOT analysis, I think you all know about it. Strength, weakness, opportunity, threat. Then PASTE analysis, political, economic, social, and technology. And there is an improvement on that, PASTEL, where we bring in environment and technology also. So industry analysis is important for companies to understand their industry's competitive dynamics, identify potential opportunities for growth, and make informed business decisions. So when you will be choosing the company I have to invest, I have to understand the industry's competitive dynamics. Within the industry, all the paint companies, how they are fighting with each other, which has the potential to grow, and then I can buy those stocks or those companies like that. So now I'll go for the models. But before I go to the model, I just give you a pictorial thing of how do industry analysis is done. You can see here, first you have to identify the industry you are going to analyze. Now, what are the different technologies they are using? Maybe somebody is highly tech, somebody is not using technology that much, etc. Who are the suppliers? Either the suppliers are dominant or there are many suppliers, so I can bargain with the suppliers. Buyers, who are my buyers? What is the industry forecast? Now, industry body, industry group, and some of the government organization, they give a forecast for the industry, how the industry is like to grow. What is the government regulation you can foresee or declaring budget and other thing time or other time government declares some regulations and etc. Political influence. Now there are certain sectors like port, airport, then agricultural products. There are various political influences there. So how that is going to, whether you can handle that or not. A lot of foreign companies, you will find they are not into the airport or though India has a huge coastline, they are not into the port or airport line, though India is flying a lot of people by airlines because a lot of political influence is there. They are not very comfortable in dealing with that. So there is social demography, computer analysis, who are the competitors, how strong they are, like cement, Aditya Birla and Adani, the competition will be strong because of the financial power of both. But other players will not be that much. They will be a tertiary player in the cement sector. What are the risk and limitation and price sensitivity? If I increase the price, whether the demand shrinks off or even if I increase the price, people will go and buy. You know, I mean, I just tell you, some of you might be knowing, Tata Steel का जो Tiscon है, the building steel rod, its price sensitivity is low. A person who makes his house for the lifetime, he generally doesn't mind paying more to get Tata Steel than Scan Steel and other thing. So this is a price sensitivity. So if you are getting into industry where price sensitivity is there, you have to position yourself you are catering to the ordinary buyer or a price sensitive buyer, etc. So you analyze which company is focusing on what type of customer, social demography, supplier, industry, etc., etc. Now I come to industry analysis. This is competitive analysis, opportunity analysis, making informed business decision, which I have just followed in structural analysis. Now you summing it up in industry analysis. You are defining the industry, as I just now showed you. You are identifying the industry. You are identifying the industry. That means you are defining the industry. Then you are gathering industry data, who are the supplier, who are the thing, market size, growth rate, industry trend, competitive landscape. Then identify patterns and changes in industry over time, shifts in consumer preference, government regulation. I just told you the government regulation. Competitive advantage. What is the competitive advantage, strength, weakness, etc., etc., and other things are there. Now I come to Porter's five forces model. In fact, this model is a very good model to understand a company rather than industry and then focusing on the company. Now let's go one by one. Any industry, this is the circle in which, say, Asian Paints, Berger Paints, Jensen Nicholson, JSW Paints, now Builder Opus, they are competing. You can take cement also. Now there is a threat of new entrant. Yes, technology is nothing. If the technology is something great, it's difficult. So if I say cement, you have to have a very big capacity if you want to enter the market, or you have to be, you have to have your own supply of, that means limestone and etc., etc. So threat of new entrant क्या है? Time and cost of entry, specialized knowledge, economies of scale, cost advantage, technology protection, barriers to entry. Now Builder could enter because Builder had that knowledge, because they were in earlier dealing with some paints, Asian Paints and ICI and other thing. Cost of entry they can handle, they are quite a money rich, they can achieve economics of scale. Because they can achieve economies of scale, they can have cost advantage. Technology is nothing new Builder can buy. And barriers to entry, yes, it is there. So they have their strategy of advertisement, another thing. So how they can enter the market. And if you are keeping a note on this, they have already entered the market. Now there is a supplier. See, when I manufacture something, I buy it from my raw material, another thing. I buy it from somebody, manpower I get from public and etc. So supplier buyer, number of supplier, size of supplier, uniqueness of supplier, ability to substitute, cost of changing. Beside that, there is a threat of substitution, substitute performance, cost of change. Now suppose I use some particular paint. I want suppliers are all giving me normal, which is given, they are giving to anybody. Now somebody comes with a substitution. I give you a raw material which is biodegradable, which does not harm the nature. Okay, water soluble, something like that. So that changes the dynamics. So that supplier can supply to all the manufacturers, or that supplier can tie up with builders or others. Then that gives a competitive advantage to that particular player. So this is threat of substitution. Supplier, I have seen number of supplier, whether I am supplying to Asian Paints, can I say no to Builder? Perhaps no. Do I have the capacity to supply? That's important. So you have to scale up the capacity, or Builder will try to bring in new supply in the market with a commitment to buy from them, etc. Substitution, I just told you, the cost of change. Buyer power. Now, who is buying? Number of customers, size of each order, difference between competitors, price sensitivity, ability to substitute, cost of changing. Now, suppose I can't substitute cement. So a cement buyer has to buy a cement if he is constructing a building. Now, of course, they are saying that some substitution has come, plastic oriented, but people will prefer cement because it gives the strength. Now, the question is from whom you will buy. If you're price sensitive or you don't quality sensitive, then you will may go to the Ultratech, that is built as cement. Or if you think, okay, this Ambuja cement and other things more or less similar quality, so I can go for that, but they are a little price sensitive. That means they are a little low price. I can bargain. So you can get those customers, those buyers. So you can plan which buyers I will try to target. So look at this and go through it. If you can study this properly and you are thinking of entering this industry, then you try to understand the competitive rivalry between the players and you try to find out where is this player's competitive advantage and how I can overcome that competitive advantage. By threat of substitution, by buyer power, I can influence the buyer so that they can shift to me. Like cement, like paints, I was telling, they are influencing the buyer, and because of the brand name of Birla is manufacturing cement, so it is almost same jaga se, same person who is applying cement to your house, he will be recommending, why don't you use this paint? This is a good paint, like that. Similarly, supplier, whether you can influence supplier, okay, I'm going to be a big player, so you supply more, give me more discount, etc., etc. So, knowing this, I will prepare my strategy, and you can understand the industry ka kya condition hai. So now let's go to the cement. If you study the supplier power, threat of new entry, buyer power, threat of substitution, you may think of, you have checked the valuation also, intrinsic valuation and market price, then you can think of, okay, considering the growth and the cement mein jo loyalty hai and the price sensitive may Birla is good, so I should rather buy Ultratech than buy what do you call it, Ambuja cement or ACC cement. Or you may think there is not much competition with more money, more marketing. They can be the market leader or very close competitor. So the market price will go up. Intrinsic value is there. Only thing they are unable to play them because they didn't have the money, or they can have more money now to fight it out. So this is one, is Porter's five forces model, it's called, and this is what I analyze. We analyze from four angle, threat of new entry, supplier power, threat of substitution, buyer power. Now the IT sector, you have seen just when threat of new entry AI came in, the competitive rivalry between the Tata consultancy, Infosys, even outside your Microsoft, your Meta, that is Facebook, Google, everything, competition has grown. They are trying to be one up in artificial intelligence. But who are the supplier of the chips? NVIDIA and some more. So who will the chip suppliers? Now they are trying to develop those chips which are faster, which does not get heated very fast, etc., etc. So when you study with this model in mind, you can understand the industry well, and you can understand the company which has a chance of doing well and giving you a better return. And that's what is ultimately your plan in investing, to get a better return from your investment. So this is one model which is very interesting model, and you should be studying it very well. Now is very simple thing. SWOT: strength, opportunity, weakness, opportunity, threat. Now the good which in your favor is your strength and opportunity. What sources can we deploy? What are our advantages? What is working well? Opportunity: who might most value our strength? What trends work in our favor? What prices are within reach? So these are the opportunities in coming in future. Strengths are now, weakness is now. I have to reduce my weakness. Is the company reducing the weakness? Or is the company who is facing the threat are trying to reduce that threat, that risk they try to eliminate? Then there might be a good intrinsic value in this company. So you have to understand what we have got, what is out there. So a company which is already strength and had good opportunity stands much ahead of this too. But if you can identify a company which is weakness, but they are overcoming the weakness, they are reducing their threats, then in future they can get more value. So if you analyze it properly, which is not so good, if they try to convert into a good, then they can be a price competitor for the good. And then if the price is very low now, price will start jumping. So this may happen in the pharmaceutical industry, this may happen in FMCG industry, this may happen in the textile industry, and etc. All right? Suppose Raymond's, it's very good, and the opportunity is also very good. But suppose some other not so good brand, they slowly try to develop the brand and try to position themselves as a gentleman's wear and try to get out of the here. Then if it is very lowly priced stock now, intrinsic value is increasing. So you should try to look for companies. You should not say, I will not look for these companies. I should focus here only because it is already there. If you can identify something which has weakness, which has threat, but they are overcoming it. They are overcoming their weakness with their strengths. They are overcoming their threat with some alternates, some risk elimination methods, etc. Then tomorrow they can be a big player in the market. You get my point? So in one side there are Cadbury's, good brand, good people's recall, very good opportunity because various taste and other thing they can develop and etc. Amul, very strong as such, but chocolate market where they are slowly coming, they're eliminating the threat, they're coming with the different brands, different type of things, and maybe they will be good. Somewhere in between Kit Kat and other things are there. So you have to analyze and you have to see which company is really trying. There you get value, intrinsic value you can get. Here the company, all priority will be priced. I just give you an example, Nestle. You know Nestle's price. Now Nestle is strength means Cerelac. Every baby or every one of us has taken Cerelac when we were a kid. Coffee, Nescafe. This is one of the very close competitor with brew, perhaps a little ahead of brew. Similarly, lactogen is a baby milk product. So baby milk, they are much ahead. An opportunity is that every parents, they have an aspiration कि अपना बेबी को Cerelac पिलाएंगे. They can diversify into different type of Cerelac. As you see now, the advertising and other thing. Now, it is very difficult for any new company who is into because it's a very sensitive product to come into this market, or you buying this stock, you may not be benefiting that much which you benefit if you buy Nestle, even if it is very highly priced, because its competitors are very far away. Okay, its competitors are there into the chocolate, but that's a small segment of the market. It's chocolates in the coffee, but they are not very close, etc. So this is the SWOT analysis. I hope I have made it clear with examples and everything, and you can understand when you are studying an industry and industry ke andar mein company, you can understand whether there is good and it is valued properly. If it is not valued properly but good, then that means intrinsic value is there. Market price is low, so you can buy. And not so good, you have to think. You have to study very deep, very diligent analysis you have to do, whether any scope of them to go move up the value chain, and then they will be giving you a much better return. Right? What do you think? If Tata brings out a chocolate, it is a good brand, it is a good reach, and Tata Consumer Products has a good distribution network. So if they come, keep a watch on this. Now let me go to the next one, which is pest analysis. Now this is something about the industry, what type of pressure it is facing or favor it is facing. Now there are political factors. Political factors measure the degree of political stability and government intervention in the economy. So in some countries, government intervention is very low. In our country, government intervention in most of the sector is not that much. One is pharmaceuticals, second is IT. But other sector, if I tell cement or for that matter, telecom or power, government influence and other things, port, government influence is high. So you have to understand that industry ke baare mein. Economic factor, economic policies and factors have a great impact on businesses and their expansion. Now, economic factor, if you want to have power, you need coal. If you want to have a steel plant, you need iron ore. So government is the owner of the ores, unless they are auctioned and you are owner of this mines or got the lease of that. So this economic factors, and suppose you want to have airlines, government will tell you which lines you can fly. Or suppose you want to have a telecom, the government will give you the bandwidth. So you are restricted to that. And already there are two players, big players, and one of the third player, which is Vodafone, which is not so good, and then the government companies, BSNL. So you know there is a two big players, Airtel and Jio. Finally comes the technology factor. Technology aspect includes factors like level of R&D, automation, innovation related factors. Here I will tell, so if you look at the automobile sector, passenger vehicle sector, Tatas were not doing very good at automotive sector, passenger vehicles. But with electric vehicles, Tatas has moved, Tata Punch, Tata Nexus, they are doing quite well. In fact, Tata Sierra also is coming with a Tata Hara, or I do not know the name, I don't recall the name. They are all have the EV version, they are doing well. So one technological factor has made Tata passenger vehicles continuously in couple of months, they are the highest sellers or in the top 5 men. Whereas earlier Maruti or Hyundai used to be there. Maruti is unable to be big player in the technology factor. They say another 2 years. Hyundai is already Creta and other things. They are coming in with technology, that is electric vehicles. So this is another factor. Social factor have a great impact on buying patterns and behavior of a nation, which is an important determinant of business. Now, social factor. I'll tell you something here. India is basically a veg and non-veg country. They don't take beef as such, etc. McDonald's, when they came in, they are very famous about their burger and their burger and beef and other steaks and etc. etc. And Muslim or Hindu both do not like it. So they had to take a long time to make India specific menus, and that is why even now some people visit those shops for social factor. I go to McDonald's, but they have not been a big share of the Indian quick service restaurants. Whereas Domino Pizzas and other things which are focused from the very beginning, they have captured quite a big size of the Indian quick service restaurant, including a lot of Indian companies. In fact, Cafe Coffee Day was doing very well, and some others, they are regionally focused, they are doing well. So social factor is very important. Fashion comes there, and as well as what type of product you will use or you will not use. That's also very important. So you must understand this political, economic, technological factor, and then industry should be coming or not. I'll tell you something which may sound a little odd. Couple of we have a huge mutual fund business, but couple of one or two big American giants, they have not come to India. I do not know the reason exactly, but there might be analyzed something, and they have found some factors are not very conducive for their way or their values of business. Every company has some values, so that is why they are not entering into India. So this is the paste analysis, and there is an improvement on this. So paste analysis is also analysis of the industry you do. I am giving you example with the industry you analyze, and you choose the companies from the industry. That is the beauty of industry and company, the structural analysis of the industry analysis, which we did in the beginning. Now pastel analysis. Now here also you'll find the same thing: pest, political, economic, social, technology. Now political laws, tax, labor, trade, because a lot of foreigner feel that our tax laws are very cumbersome. That is why they do not open. They try to open the office in Singapore and operate here in the financial sector, or Mauritius and operate here. Stability, we have a stable government for the last 15 years almost, and corruption has also come down. But in the lower level, foreign believers are saying that India may, if you want to be into the certain business like transportation and other things, you need to be politically properly aligned. Now the economic factor is growth, inflation, interest, employment. Who come? There is an advantage of India, the growing economy. There is a huge employable, but the problem is their skill set is not so. Skill development government is taking very initiative, and higher income group. Trust me, Indian higher and middle income का जो size है, that is almost equivalent to Europe size. Maybe buying power is a little less, but overall in aggregate, they are a huge market. That is why a lot of foreign companies, they don't want to lose Indian market. Sooner or later, your Apple will be selling quite a huge number of phones in India itself. Now they are assembling and exporting it, but increasingly their sale in India is increasing. Samsung and understood earlier. Samsung and LG earlier understood that India, there is a very good potential of consumer durables. So you can see the consumer durable market is flooded with either them or ye. Tata's with Voltas, Bajaj, they are now falling third, fourth, fifth. But the top they are only will. They are Samsung, they are LG, there is in AC you have Daikin, you have Whirlpool, and all these companies are there. So this is the income and economy as well as social aging, the middle age group or the two income single family, so they have more buying power, lifestyle. People want to move the lifestyle. They want to have their coffee in cafe, coffee barista. They want to go for a tour to the foreign country. So foreign tourists are they are trying to propagate or Indian tourism like Cox and Kings, which is in a bad shape now for other reasons. They are trying to promote foreign tours. So that because Indian population is now in the age group, their earnings are more, they can go to the different countries. Now, technology is again, as I told you earlier, various technology are evolving. I talked about the electrical vehicles. I told about you our interest for the large dimension televisions, etc., are increasing. So this type of products demand will be increasing because Indian per capita income is increasing, and Indian middle and higher middle and upper middle class, they have the buying power for these high tech products. Environment. Now these are the two new things I'm adding here. Environment is becoming an increasingly important factor. Climate change, ethical, recycling, disposal, sustainability. And legal is antitrust, labor, copyright, data protection, health, and safety. A lot of companies, they don't want to come here because of the data protection law. That is why a lot of people are rethinking whether their main server will be in India or not. A copyright, whether they should have the copyright given to the Indian government or not, or they should have the copyright. Labor is, we are still not very flexible in labor reforms. Oh, that is why labor problems are very lengthy problems in legal code. Oh, that is why a lot of foreign manufacturers are rethinking whether they should come or they should get some Indian manufacturer, get it manufactured for them. Environment is climate change, various climate issues are every day there. Ethical standing is very important because of ethical issues. Some of the garment manufacturers and other things, because they moved out of Bangladesh because of they were paying very less and they are exploiting. So environment factor is an important factor in sustainability. Indian government is sustainable and focusing on even with different sustainability measures. And most of the companies now, perhaps are to submit business responsibility and social responsibility, which is lump sum is sustainability report. ESG score, environment, sustainability and governance. Environment, sustainability and governance. ESG score is becoming important, and sooner or later, people will invest companies who have good sustainability, good environment care, climate care, and etc. In fact, in the last financial year, 3 lakh crores has been mobilized. 3 lakh crore dollars, has been mobilized by the different fund management group, which will be invested in the companies which are taking care of environment, which are sustainable, which are well governed. So all these factors are very important when you choose an industry. And if steel is an industry or power is an industry, there's a lot of pollution. You have to identify which is less polluting, more environment careful, and following the legal compliance and etc. They can give a good steady return over a long period of time. So you have to see this thing and identify the company which will be a good pick up from these companies, which has a good market price now, but hidden value or the intrinsic value is much higher. Right? Mahindra, you can name, they are into the agriculture, they are making tractors, now they are making tractors which will be run by electricity, so the diesel pollution is less. Then they are already into the electric vehicles, and they are into the logistics also. They are sustainable, and they are very ethical company. So they are growing quite a fast way. Similarly, legal, if you can handle your labor and other things like Bajaj and Tatas, they are good into that. That is why people try to, oh, the KTM bikes and other thing, they get it manufactured by Bajaj here. And Bajaj is now the owner of KTM. It's like that. So pestel analysis is the revised of pest analysis, and which gives you an understanding of the industry and which companies are following or less affected by these things. So you can pick companies because they will give you a better return in the long run. Having said that, let me come to my next year industry life cycle. Look at music industry. There was a time when gramophone, pin, then came LP, EP, then came tape recorder, then came T series, and market was flooded with everything. Then suddenly the CDs came. So the music CD में फिर भी सुन रहा था. But then one cool day, Steve Jobs came out with something in Apple. You can store 1,000 songs of your liking, and you can use your smartphone to listen to the song. So the no record player, no record music industry is in a flux. So industry has a life cycle. Introduction, when you just start, then you have a growth phase. When a lot of brands and other things are growing, then maturity. Before that, there will be fight. Some people will be mature, and then there will be decline. So it is like that. Okay, I'll give you another example of this. This is also an industry life cycle. Now it starts with embryonic, then growth, then shakeout, then mature, then decline. You have seen introduction, growth, mature, decline. You have seen introduction, growth, mature, decline. But here I am showing embryonic, growth, shakeout, mature, declining. Embryonic is when India was facing the mobile phone. Slow growth because high price. Each call used to cost 11 rupees to go. If I call, I have to pay 11 rupees. If I receive, I have to pay 4 rupees. And significant investment. At those days, each phone used to cost a low. And you, on the other hand, you had those phones. Then the mobile phone started growing, rapidly increasing. Then you have Reliance Communication come with LG and Samsung, small size, then Uninova. Then you have a lot of Indian companies and foreign companies, they came in, huge growth. A lot of companies were fighting. You, मेरा कार्ड लीजिए, इसका कार्ड लीजिए, उसका कार्ड लीजिए, etc., etc. You have seen that. You have grown through it. Then there was a shit out. Reliance came in. Others were finding it problem. So finally, we have mature market. We are signing. Now there is stability in the market. There is Vodafone in the end. There is, or what I call it, BSNL. You have Airtel. You have Jio. Sometimes Jio is first. Sometimes Jio is second. And maybe some new technology, 5G, 6G, 7G will come when you will be talking in a different way. Maybe somebody will talk on your behalf. So industry life cycle, you have to keep a notice. So if you have entered here in this stage, invested in Airtel, you have made a lot of money in Airtel. Okay. Or if you the growth stage of the gold jewelry, Titan was the first. So if you have invested in Titan, you have made a lot of money. Now, of course, Kalyan Jewelers, Builder has come with it, others are coming, so it is maturing market. And then maybe sometime you can't afford gold anymore. So this is industry life cycle. Finally, let us sum it up. As a part of industry analysis, more than product-wise qualification, what we did beginningly, life cycle, that fourth cycle, growth, cyclical, defensive, and downfalling. Classification of industry is more useful for equity investment decision. You can take more knowledgeable decision making. Also, we try to understand, and I explain repeatedly, why structural analysis help us to go for company analysis, and structural analysis ka sum up is the industry analysis. If you understand that, then you can choose a proper company from that industry which is growing well with the economic growth. Thank you. We'll see you in the next session with the company analysis. Thank you again.